Hi guys, welcome back. So on Tuesday I made a video and I said that I think some of the tech stocks have already reached the recent bottom and I would expect to see rebound. And then for Wednesday we saw Nasdaq reaching another low than the lowest of Tuesday, and I saw some people coming to comment on my video and say that I want to laugh at you. Well, I want to say that this is very discouraging comments because I already said it on Tuesday that I'm just here to give out my own opinion, my personal thinking, but you don't have to take it, and I'm not here to guide you anything, but to share my own point of view. So there is no reason for anyone to come back and point finger. And my whole point was to not panic sell at that moment. So within these 2 days, I felt a little bit stressed. But the thing is, you might find strange that even though Nasdaq made a lower low on Wednesday, a lot of the growth stocks did not make lower low than the Tuesday, except the ones that were beaten down by the sector, like the EV and some of the ARK related sectors or Bitcoin sectors, etc. were beaten down by the sector, so it reached lower low than Tuesday. But if you look at WIMI, it never reached lower than Tuesday, and Tuya looks like it broke out the descending triangle, and on Tuesday it precisely stepped on the trend line and bounced back up. Also, Unity reached the lowest at 76 on Tuesday. Palantir lowest on Tuesday 17. Jamia lowest of 17.9 on Tuesday morning as well. So these stocks that have shown the recent bottom on Tuesday right now shows a stronger momentum compared to the other growth stocks, the other sectors. Because if you compare to the EV sector, for example, still under a lot of pressure. I mean, look at Tesla. That should be the leader and affects most of the other EV stocks. Continue to reach lower low. And when it rebounded on Friday, it could not even reach the 5 MA. So I think this is more driven by the sector of EV instead of the market. And NIO just followed Tesla right now. If Tesla rebound, NIO rebound. ZEP is because of the earning on Thursday, so that doesn't count as much. Baidu is under a lot of selling pressure because of ARK Invest keep selling it, which we cannot blame them because they have to in order to save themselves. Which makes Baidu looking more attractive because it was first the market correction of tech stocks and then the politics issue and then the article selling large chunk of shares, and then now the ARK kept beating it down. This is quite unfortunate, but no one could see that coming. JKS also reached the recent bottom on Tuesday at 28. A few days ago when I bought the dip at 33, I said on the Discord that I am aware this might not be the lowest point and the next add-in point is 28. Because I thought 28 would be quite a fair price for JKS, so it reached exactly 28 on Tuesday. But I was too busy and focused on calming everyone else down, so I did not pay attention to it. I have set price alert for JKS at 28, but it did not reach exactly 28 yet, so I missed that. Otherwise, I would have catch a nice rebound from there. So the fact that even though Nasdaq had made a lower low than Tuesday, some of the growth stock had already made the recent bottom on Tuesday and did not reach lower low, that tells me that finally some capital is moving into growth stocks to buy some dip. So that's why I said we have seen a recent bottom for growth stocks and it might rebound. But is it a reversal? We don't know yet. It's too early to tell. Maybe for some stocks, yes, and for others, no. Just because I don't think the short sellers have stopped yet. So why did all the stocks go up on Friday? First of all, it was a long overdue rebound. It already came 1 to 2 days later than I expected, but it came. On a technical standpoint, we have been seeing oversold and divergence for a while. And in terms of depth of the correction, we have seen enough of it for a short period of time in a matter of a few days. Stocks cannot keep going up just like they cannot keep going down without any pause in the middle. Second of all, I think there is too much desperation and panic driven already. A lot of people had panic sold on Tuesday. Institutions are very good at that. The Wall Street knows exactly what retail investors think. They know what to do to make people panic sell if they did not already. The final shake can make it happen. But whether it's panic sell or selling out of desperate, when they saw the stock they panic sell only went up, chances are they are gonna FOMO back in and buy it at a higher cost. That would just be double regret. This is why on a day like this, it's better to do nothing but to stay put. That's why on Monday, I warned people about a sell-off coming, and on Tuesday, I gave the fireman story. Because in any way, it's much better to sell when you're calm and not driven by emotion at the moment. Otherwise, you might end up regretting and buying it back later when it's at a higher price. That's why if you're in my Discord, you would remember that basically at every rebound of the market, I have reminded to trim. The last time was the end of April when the small caps, the growth stocks were outperforming Nasdaq and the FANG. I said that whatever stocks you could not wait to get rid of during the fall previous days, now is your chance to trim it. This is why we always trim at the rebound so we don't panic sell when it falls further. Nasdaq went up 2.3% on Friday, but it was quite lack of volume. And why is that? Like I said on Friday morning, I said a lot of rebound from stocks today lacks volume. So it looks like it's caused by some of the shorts are covering. Especially retail investors who shorted would panic buy whenever they see some green at the pre-market. And I said that I think some money are still waiting on the side and wait until Nasdaq push above the resistance to re-enter. And if the index get rejected, we might see some short position to be open. I think that's easy to understand because on the Friday pre-market, we see a lot of the stocks went up a little bit. So it looks like the rebound was here. And if you are a short seller at that moment, what you would do would be to close your short position. Because shorting is much more risky than going long. So that's why whenever there is a momentum to go up, you would end up panic buying easily. Shorting is different than going long. It's a different mindset. So the more people cover up their short position, the more the stock price would go up. So that would explain why such lack of volume can drive up the price. The other reason is because previously we saw a lot of the heated sector to be in the material sector, the heavy metal, because of the inflation news. And it went up and up and up. A lot of the smart money flow into those sectors. And now those sectors are getting in a correction. So that's why on Friday we saw some capital flowing back to Nasdaq. Not a lot, some. And we don't know how long they will stay. Maybe they just want to catch a rebound. We have to see for later. And there's one more thing. Is that after so much desperation, a lot of retail investors want to give up on stock. And the institutions don't want that. They don't want people to leave. So of course, they need to give out some hope first and say, hey, don't go, please stay. The party is not over yet. And I think that's exactly what happened. And there's one thing to notice is that if you look at the 5-minute chart, for Nasdaq on Friday, it gap up high and then continued to go up slowly, climbing up slowly, almost near the end of the market, near the closing. But if you compare with ARK, it followed Nasdaq at first, open up with the gap up high, continue going up and then down, up and down, up and down, and then up and down again. Unlike Nasdaq going like this. So what I think is short position opening here. This is to attract short sellers. Now, if you look at the daily chart, on Friday, ARK is at a very critical point here. It passed the 5-day moving average, but got rejected exactly at the 250-day moving average. In the end, it closed at 104.3, slightly below the 250 moving average of 104.5. So at the closing, it did not stay above that. And for short sellers, it usually means this might be the best chance to short because the 250 moving average is quite significant. When a stock breaks through that, it means that it has turned bear. So we see it has broke below the 250 moving average and then rebound to this previous support. If it doesn't stay back above the support, it would act as a resistance. And if it really gets rejected at this point, it would mean the next thing is to continue going south. So that's why for short sellers, it looks like it's getting rejected by the 250 MA and it would be the best time to short it. So even though on Friday we see almost every single stocks were up, the ARK ETF had a divergence with Nasdaq. And to me, it shows that short sellers are opening the position. Now, It could be institutions and it could be retail investors. So it could be good and bad. If it's retail investors, it would mean the institutions are purposely luring the short sellers here. And that would mean it can rebound to shake off the shorts, make them cut loss. But if it's institutions shorting here, it would mean a disaster coming. And if ARK is down, it means a lot of growth stocks would go down. If ARK rebounds, a lot of growth stocks would rebound as well. Right now, we are definitely at a point of divergence. It's not as simple as before. It's very complicated. Before, when the market is up, everything was basically up. And now the market and stocks are having divergence, and it's much harder because it all depends on what the Wall Street wants, where they point to. And all we can do is to try to see what they're thinking and what's their next move. So a few days ago, I said that if Nasdaq can close above on Friday, the 20 MA, I would still consider bullish. Right now, Nasdaq 100 closed above the 20 MA, while the Nasdaq Composite closed slightly below. See, 149.98 and 20 MA is 13,429.9 and the 20 MA is 13,495. So it's slightly below the 20 MA. This is important for me to look at because ever since the crash of COVID, it had never dropped below the 20 MA with every correction it did. So this reflects that Nasdaq is not as strong as before. The momentum is not as strong. So it just confirmed when I said that we cannot use the same mindset as last year to do this anymore. So ever since the beginning of this correction back in February, March, I've said several times in my videos that this is a refresh, even though I did not think there was a market crash. I said that basically whatever the market had trained us to do over the last 12 months, right now we need to completely forget about it and do the exact opposite. Then we can win in this stock market. Let me know if you remember I said that several times. And this is very important right now. Think about what the stock market had trained you to do naturally in the last 12 months. So what to do next? Like I said, for every rebound, we trim to keep some cash in case of further dipping. Don't be afraid you might lose the lowest point of some stocks. You missed the dip. Don't be afraid of that. As long as we have cash, there are lots of chances. So don't rush and don't think just because you lost the money, so you have to do something to cover up the loss fast, because this kind of mindset can easily make things worse and make you lose more. So if next week it open up high, I will start trimming, and the more it goes up, the more I trim slowly. Coming up, we still have a lot of resistance ahead of us. It's gonna take a while, I think, for Nasdaq to reach the top again or make another all-time high. For now, I am not seeing a reversal. I'm seeing it as a rebound. And I think now is not the worst moment you would feel if you are holding a lot of the growth stocks, because I expect to see more and more bad news coming out, one after the other. And also, right now, tech stocks rebounds basically drives most of the tech stocks or growth stocks to rebound altogether. But at some point, when we get into a reversal or truly recovery of the tech sector, so we're gonna see divergence of some stocks rebound and some stocks don't after some point. And the moment you see that while others rebound and yours don't, that would be much worse than right now. Because at least right now, everyone is at loss, everyone's bleeding. There's no survivor for tech stocks or growth stocks. But at some point, when you see that yours are not rebounding, but continue to dip, that would make you feel way worse. Some stocks would bounce back up, and some stocks would never recover. But anyways, about this, I think that's worth another video to talk about. What stocks would rebound, what stocks won't, and the next strategy. I've done a lot of thinking and research about that, so it's not like I can talk about this in one video. Right now, I would suggest to try to keep some cash. Like I said, I will shrink some long-term in my portfolio, free up some cash. I do some tradings to catch the rebound and take profit quickly after that. For example, I bought the dip of Palantir on this day. Catch a rebound. My cost was 18.7. I shared the transaction on the Discord. And I also bought Wimmy on Wednesday. Added more Jumia around 22. Also catch the falling knife on Butterfly at 9.3. Another falling knife on Thursday for open at 13.7. Like I said in my last video, right now it's a paradise for traders and short sellers to do quick in and out with tight stop loss in such volatile market. Why I chose Open, Butterfly, and Palantir, because I know this is what ARK Invest endorse, and when ARK is attacked, a lot of these stocks got dumped irrationally. So like I said before, to catch a bigger rebound, go where the fear is. And also I personally wanted to show a little bit support to ARK and Cathie Wood, so I caught the falling knife, but doesn't mean I'm keeping it for long term. For this kind of trade, I'm happy to take any profit. And once it grows above my cost, then I will be in a comfortable position. Then I can either set trailing stop limit or keep changing the profit-taking limit. So if it dropped to that point, it would sell to take profit. And if it doesn't, it can keep growing like this. And you can change it like every day, so you can lock in profit. So that's it for today. I hope you find this info helpful. Right now it's an extremely difficult market, but if we look at it from a different angle, it might be also a very good market as long as we can figure out what the institutions are doing. Now, if you have enjoyed this video, please give me a big like and write me a great comment, and I will see you in my next video. That's it, guys. Hope you can find my videos helpful. Make sure you subscribe to my channel and give me a big like. Thank you.